Hello everybody, welcome to another video here on the channel. This is Chart Annotations Review episodes 17 and 18, I believe. Yeah. So this is Tuesday and Wednesday of this specific week, which is last week. So yeah, I'm going to be going over price, going over some concepts. If you haven't already, feel free to check out episode 1. I sort of go into what I will be explaining, all of that. We're on episode 17 and 18 now, so definitely very, very far into it. So that's that. And then also feel free to check out my Discord. It's in the link in the description. You can have free access to a community where starting next week of recording this video, I'm going to be live trading. I think, we'll see. I'm going to be doing outreach, live trading, all of this stuff, and daily charting reviews. So let's go to the daily here. Actually, let's go to the 4-hour. And I'm going to take off these annotations. Okay, so we have been in an uptrend forever, right? This is all the way back in 2023. Made all-time highs here, came down, retraced, came back up. And now it seems like we're in another little retracement here. So if we are to... the thing that sucks is that with these annotations, you can kind of see where we're going to go. That's why I'm kind of excited to get caught up so that you don't see what's going to happen. But we did retrace. I don't think we retraced a discount though. So out of this specific fractal right here, we have not retraced a discount. Looking at these lows, we have this low that's untouched, this one, this one, this one, this one. It does look like all of these could get taken out in the future, just like what happened here where we had this low, this low, this low, this low, this low, and we just sold off, took all of it out. That might happen again here sometime in the future. We'll just take out all these lows, but we're not ready to do that yet. With trading, we're not swing traders, we are intraday traders, so we just want to see what's happening right now. I don't care about what's going to happen in the future, I just care about right now. So here we're just in this 4-hour, we're just kind of selling off. Really not much to see right here. So I'm going to go to the 1-hour. So the 1-hour, you can see there's a massive fair value gap that we are inside of. We are also in a discount of this range here. If we go to the 15-minute, you can see this range blown up a bit, right? This is the range. We're tapping into a discount. We also tapped into this discounted 15-minute. So I'm sort of looking for more bullish models. I want to see models that are going to be more bullish. So now let's go to the 1 minute here, and the indicator that I have is I have daily, weekly, monthly opening. So we look at the daily open. We've been trading below it, and I do want to see us at the end of the day finish above it. It might not happen, but with time and price, if we usually trade below it, we should start to see an up move in price. In addition to that, I have fair value gap by nephew Sam. It shows all these fair value gaps all the way up to the 1-hour time frame is what I have it set to. And then ICT kill zones, we can see London and Asia. So Asia has been taken out. Asia high still up here. London, we just finished London. I believe so, yeah. We just finished London. So we may see us come up to here. So we'll see what happens there. Alright. Alright, so we tap into this 15-minute fair value gap. I'm going to put this to 3x speed. So right here, so we're just generating some structure. It's still very, very early. Have not done any annotations yet this time. Okay, so first thing here, we're in an uptrend going into a macro. So we'll see if we get any sort of displacement down. This one is a little tricky though, because you could consider this a downtrend. I mean, overall we're in a downtrend, but right here, before this macro, we're in a slight uptrend. It's not really that clear though. So first things first that happens is we create this SMT. With this SMT, this is a little difficult because here's a recent low is displaced through. The macro is about to end though, and this SMT is a little stronger. So I do want to see this high get taken. Macro is over, so we really don't have to respect this 1 minute. So we kind of do respect to here, but then we come up and we take this SMT TP. We come up here, we tap into this 1 hour fair value gap, and we create another SMT. So just remember though, our overall bias is it's bear, or wait, hold on, it's bullish. So this SMT may not get respected unless we get some displacement down. I want to see good displacement down just like this. So right here could be a possible entry because we have displacement down, 1 minute for value gap created. This could be a possible entry. I would not take this though, just because there isn't enough. It's just an SMT with displacement down. But up here would be protected high. But in addition to this, you could also see this as a retrace. Did that do anything? What the heck? You could see this as a retrace. Respecting it. We also have this 1 minute, 5 minute. So we may just disrespect this completely. So we're sort of consolidating. We did create equal lows here too. So this is definitely something that probably will get hunted very soon. We tap into this 1 minute again. Sort of consolidating, but yeah, right here we take out this protected high. So something I've noticed is if we just disrespect an SMT right here and we take out the protected, we may want to just see a reversal to the other side. So we may not see any bit lower. We may just see us go higher. So right here we tap into this 1 minute, and if we do take out this protected high, it's showing that we're not bearish and that we're bullish. So this is a possible first entry you could take. I would not take this just because it's a little too risky, but you could probably target discount of this range from that, which has already been hit. You could look at the bigger range, so you could look at this entire range possibly and look for 50% of this range. So let's say you did take your entry here and you were targeting just up here. Again, this would be scary because we do have a 15 minute right here that we may just reject off of. We're in another 1 minute. We come up and there we go. We take out discount. So right here could be an entry. This would be a winning trade. But right here, this would be a losing trade. If you took this, you wanted to target this low. Honestly, it kind of depends. This probably could get taken. It depends on your broker. But if you did take this trade, let's say you wanted to just take off. If you saw it pretty much go down to here, you could do that. If you put a limit order here, you probably would not get taken. But we did come and we did create equal lows with this. So now that we tapped into a premium of this massive range, we're also in an uptrend. I kind of want to see us reverse to the downside, maybe in this macro. So we get displacement down. Here could be a market structure shift. In addition, this could also be a market structure shift at this low, but we'll just do this low because we did market structure shift off of this. Want to see a retracement. Now, here could be first entry. The only problem with this is that We keep going up here, so I would want to see the reaction off. I usually don't take first entries like this. There's really nothing here that wants to show that we're going to go lower except the macro and this premium tap, but we have no SMT right here, so this would not be probable at all. Yeah, you can see we would definitely get stopped. We get stopped out right away, so this would not be a good entry. All right, so now we get more displacement down. Still no SMT formed up here, but we do get displacement down. We get this little tap right here, but we end up coming back up again. Now we're entering this other macro. This 830 candle is not that big. Sometimes this 830 candle can be massive. This is a small one. But yeah, right here we're just sort of doing nothing. There's not really any models that I see. But overall, you can tell this macro right here did its job. What macros are supposed to do is they're supposed to reverse price. They're supposed to reverse the trend. We have an uptrend. What happens here? We get a massive sell-off. This right here breaks the trend. Okay, so now we're just kind of going up here. We form an SMT up here. And then this high gets taken. So this protected high gets taken right away. And sort of the reason why it does, and the reason why this does, and a lot of people may mistake in this, is that this is not really a protected high. Yes, we created an SMT. Yes, we had displacement down. But why is this high not protected? It's because we didn't create any sort of PD ray on this move down. This move down is really nothing. Yeah, we had a little bit of a move down, but there's no fair value gap created here. So there's no reason price should respect something off of here and not go back up here. There's nothing for price to react off of here. So that could be why this protected high was taken. But it's not a protected high. And then we also do have sell side liquidity down here because of these equal lows. So he's probably going to get taken out in the future, which everything gets taken out in the future, but we do have equal lows down here. So now we have an uptrend going into this macro. Right here could be your market structure shift, but again, right here, market structure shift, we disrespect this fair value gap. It shows we want to go higher. So we end up creating this high all the way up here. This was the 930 open. We come up here, and now we have this 1 minute. So let's see if this gets respected or not. It's still respected. Okay, it gets disrespected here. So now the next draw of liquidity should probably be these lows. These lows should get taken out. So these get taken out. And then where's the next equal lows at? These are the next equal lows. So these should also get taken out sometime. But right here, we create an SMT, right? This makes a lower low, while ES makes a higher low. So if we see a rejection off here, I could see us go higher. So yeah, this is our massive rejection up. I want to see this SMT TP get taken out. So right here, on this candle, it technically does get taken out because since we have an SMT right here, that means ES at the time actually came up to here, and it did take out this SMT TP. So if we form an SMT right here, this SMT TP is technically taken out. We don't have to go up to here. And then right here, oh yeah, so we have this SMT right here. This is the SMT TP of that, and then yeah, we got that taken out. What is this right here? I think that's for the future. Okay, so after this, we have an SMT formed. This here's your SMT TP from this SMT that's formed. We come down, take that out. It's also the protected low of this SMT. So it's a double draw of liquidity. These are really nice to see. If we have an SMT TP paired with a protected low or a protected high, it's a great draw of liquidity. So that's exactly why we sold off right here. And then we formed another SMT. After they form that SMT, this SMT TP gets taken out. That is also aligned with this protected high, and then this SMT TP also gets taken out. So now we're just waiting for some more structure here. All right, we form an SMT right here. So now let's see, do we get displacement down? No displacement down yet. So now we get displacement down, and we have this order block. So this would make this high protected. We have this 1 minute. We're respecting this. When we tap into this 1 minute, this could possibly be first entry. Okay, so now looking at this, we have an uptrend going into this macro. These are a bunch of aligned things. I would probably take this entry. And my target would be this SMT TP, which does get hit. So right here would be a beautiful trade. So now we come down, we create another SMT down here. This means that this high, also aligned with this protected high, should get taken. This SMT TP with this protected, this should get taken right here. Oh, it looks like this is already protected high. It probably might not get taken though, because actually we'll see here. Let's see what happens. Okay, so right here, after this SMT, we have displacement up. We create a fair value gap. You can also see, in addition to creating this fair value gap right here, we disrespect this fair value gap, which shows that we want to go higher. We come back down though, and we do disrespect this 1 minute right here. So we have a 1 minute right here. I can take this off. Even though we do disrespect this 1 minute, which would be an entry, this would right here be first entry. And then you'd probably put your stop at this low. You would get stopped out if you took this, but we do create another SMT down here. So now we could possibly go higher. So right here we go higher, and now we have some double confluences. We have this SMT, which this is the protected low, so this is not invalidated yet. Even though this entry was invalidated, the model is not invalidated. So now we have double SMT, displacement up. If we were to tap into this fair value gap, I would take this entry, but we don't. We just take this SMT TP, and we come up forming another SMT right here. So this is where it can get a little complicated. The draw of liquidity from this SMT should be up here, right? But this SMT is formed. If this bearish SMT is formed and we have displacement down, creating a fair value gap, it would disrespect this SMT TP up here because we have basically an obstacle in the way, which is this SMT right here. If right here's your displacement down, I would no longer care to see this get taken. Here we have this 1 minute again. We sort of consolidate, create an order block in it. But right here, this is your fair value gap tap. This right here, this right here would be first entry for this model. So from this SMT, displacement down, we want to look for the first fair value gap that we tap into, which is this one. This would be your entry. You would look to take your TP down at this low, which is also a double draw of liquidity because it's a protected low and it's an SMT TP. And then we come down and we take this protected low as well. So that is showing you the reason why this SMT right here failed. It's a great explanation. It's because this SMT formed and this SMT wanted to drive us back down lower. So it's things kind of, it's models battling against models, but if you can identify that, then you can see which models will work. All right, so right here we create another SMT. I want to look for displacement down. We don't really create any PD raise except this order block right here, but we do take this SMT TP out. and then we come back up, retrace, and then we come back down. We take out this low. So here would be your second TP out of this model right here. All right, and then so right here, we form another small SMT at this low, and we also form this bigger SMT. So that means this becomes a protected low for this SMT, and down here is a protected low from this SMT until we have displacement up enough. So right here, this SMT gets taken out of this SMT. I want to see us create another candle to the upside. So far we don't. So right here's a fair value gap, but we do take out this protected high. But we still can go higher. We can actually go from this SMT right here. We can go all the way up to this high right here. So you can see, if you haven't been watching my videos, this is probably super confusing to you guys. So that is kind of why I recommend watching previous videos, so you kind of get a little bit of an understanding. So we take out this protected high. Again, just to remind you, we do still want to see higher from this SMT. Nothing has invalidated that yet. I could possibly see this protected high getting taken because we are in an uptrend. We are respecting this fair value gap and this fair value gap. You can see with the fair value gaps by Nephew Sam, we're respecting these green boxes. So we're respecting bullish PD arrays. So I want to see this high get taken. So right there, the high gets taken. Beautiful, right? So we come up and we get really, really close to taking this high. But we actually sell back off. We retrace to discount. This discount is this leg right here. We retrace to discount. We come up. We retrace to discount of this smaller fractal. Respecting this 1 minute for fair value gap right here. We sell off a little bit more again. And now we're having a downtrend into this macro. So if I was looking at this, I would honestly want to see this high get taken. I want to see this purple line, which is the protected. This is the protected high and the SMT TP. I want to see this possibly get taken from this macro right here. Okay, so right here, this is your market structure shift. We have fair value gap created here. We tap into the fair value gap. And honestly, for me, if we tap into this fair value gap, I probably would take an entry in here to target the highs. So here would be first entry. Some people may wait. I mean, I may wait. It just kind of depends on my mood. But I would take this. This would be my stop loss. And we'll see what happens from here. Okay, so we would just instantly get stopped out. So this is a beautiful model, right? We retrace the discount of this bigger range, come down, retrace a little deeper. We respect this 1 minute and respect this 5 minute and this 1 minute, right? We're just wicking into these. Displacement up, market structure shift, fair value gap created. There's no reason this should not get taken. So this obviously shows me that we're pretty bearish now because we did not respect this bullish model, but this would just honestly be tough luck, right? We do come down though and tap into this 1 minute, so it is possible that we would see higher after that. But you can kind of see price is just not being efficient right here. So we're just consolidating, but we do now finally end up taking the protected high. So the only thing to notice is right here, this does not technically have to be respected, right? The overall goal of this SMT is for this to be the draw of liquidity. This high right here is what wants to be the draw of liquidity. Whatever happens within all of this noise right here, all of this internal structure, doesn't really matter to this SMT. So zooming in here, this does not have to be fully respected. We could come down and we could respect this right here. So depending on the trader that you are, this could also be first entry. And you might want to see us possibly retrace to discount. So right here is in a premium. This leg right here, this entry is in a premium. And that's kind of the thing with trading. That is what's difficult about trading. That's why a lot of people fail, even if they know a bunch of stuff, is because a lot of people may take an entry right here, and after we take this entry, we may just go straight up. But if you want to be more cautious, you would wait for this entry right here to then go back up. The only problem is that a lot of the times we may tap this first entry right here and just run, right? We may just respect it, meaning that if you waited for this entry down here, you would never get tapped in and you would miss on a winning trade. So it just kind of depends on the trader. It depends on what you're willing to risk. But again, it's always a game of probabilities. It's just if you win most of your trades, you'll have more wins than losses, but everybody's going to have losses. So we come up, take this protected high. I also now want to see this SMT TP get hit. So that gets hit. And that is from... Actually, I honestly don't know. What is this from right here? This might honestly not be an SMT TP. I don't know what kind of SMT... I don't know what SMT is actually forming this. I might just not be seeing it. I'll just keep this here for now. Alright, so this gets taken, and it's 2 p.m. So something else I've noticed is that look at the whole day, right? Look at the range. Look at how, you know, we're going up, we go down. If you look at this from an outside perspective, this all just looks like chop. It's not chop. It's a bunch of models, a ton of models in here. But something I've noticed is that, and I don't know how I've not noticed this earlier, but a lot of people still don't notice this, is that at 2 p.m., we tend to trend in a certain direction. That's pretty much a bigger range than anything else was. So right here, take a look at this day. It looks like chop. But at 2 p.m., look what happens. We get a massive run up, and we break out of all of this structure, and we get a massive run. And we may just keep going here. But at 2 p.m., it should just be a massive trend in a specific direction. And usually it's all the way until we get to this macro. So another thing here, we trend up and then we trend down. So if you're to find a model, for example, this is a bullish model, right? This bullish model should continue after 2 p.m. for a decent amount of time until maybe a massive liquidity is hit. So right here is buy side liquidity. Now this may not get hit, but it does draw towards it. This could be a retracement. We have a downtrend going into this macro. We could possibly see higher from this macro. We sort of don't. We sort of just consolidate here. I mean, I guess we do. Yeah, right here we downtrend, macro reverses us. It is sort of the end of the day, though. So, after 4 p.m., if we just consolidate, we're probably not going to take out this high. But it does look like we sort of just consolidate here. But even though this high doesn't get taken out by 4 p.m., we could still easily take it in the overnight session. Like, once it turns like 8 p.m., we may take it. So here's 8 p.m. Asia session is starting up, and this high probably will end up getting taken. I'm actually going to switch to the 1 minute here and watch this. So yeah, on the 5 minute here, Asia takes this high. You can see right here, ICT kill zones. This is Asia. And we took out this previous high. Okay, so now let's go into the next day. All right, so next day here, let's take a look at the outside time frame. So looking at the 4 hour, on the 4 hour here, you can see we are bullish, right? What I wanted to see yesterday was starting here. I wanted to see a bullish run, which is exactly what happened. So again, we're still bullish. 4 hour fair value gaps tend to get respected. So right here's a 4 hour fair value gap. We may come down to it, we may not, but we did respect this 15-minute as well. So let's go to the 1 hour. So on the 1 hour here, do we respect 1 hour fair value gaps? There's no fair value gaps created. There's some of these right here. So we are in some 1 hour fair value gaps where we're wicked up. So I do expect us to go higher. I do expect us to go higher in the morning. Also looking at daily open. Here's daily open. We are trading above it. We are sort of below right now, but you have to also look at right here, this 5 and 15-minute fair value gap. That is what we are inside. I'm actually going to draw out this 15-minute fair value gap. So we have multiple right here, which on the 1 hour we are respecting, but on the 15-minute, it doesn't look like we're respecting it, but we are. It's just on a higher time frame we are. But we have tapped into this 15-minute, and obviously we're in these 1 hours. So I do expect price to go higher. So right here, I'd be looking for bullish SMTs. All right, so right here's the first bullish SMT. A couple things I want to see. I want to see this 1 minute get disrespected. It sort of gets respected here, but right here it gets disrespected. We have displacement up. We have a fair value gap created. I want to see this high get taken. We don't end up getting any entries because we don't retrace into any PD arrays. But right here, it's your SMT TP. We rebalance to this 5 minute. And then up here we create this SMT. Now I want to see displacement down. So here's displacement down, creating a fair value gap right in here. This is kind of a weirder fair value gap, but it is still fair value gap. This is a weird fair value gap. But this would be protected high. We take out this SMT TP. We may come up to this protected higher. We come down a little bit lower. We're just sort of consolidating here, but we do come up, take this protected high. All right, so now we form another bullish SMT, so I could see higher. Watching more price here, we create some more bullish SMTs, keep going higher. So you can see right here, after hitting this 15-minute, my bearish was to go higher. It's exactly what we've been doing. Now we tap into our first macro, so this could reverse price a little bit here. We have displacement down. This right here can be considered as a market structure shift. It is really small though, and that's the thing that's kind of difficult about this. We have a massive uptrend. So how could this one little single candle make us start to go down? It is possible, but it's also not very probable. So right here, we have this fair value gap created. This could be first entry. I would never take this though. Not nearly enough conviction. Right here, we would get stopped out if we put our stop above this candle. Not a good entry. I want to see some sort of SMT formed up here. So still nothing. Now we're just watching some more price. I just realized I started charting all this super early, 3 a.m. No wonder it's only 7 a.m. right here. Okay, so now I'm getting into some more annotations. We have an uptrend going into this macro right here. So I do want to see a possible reversal. So we have market structure shift down. We form an SMT up here. And right here, massive displacement down. So with this massive displacement down, this SMT TP gets hit. This is obviously protected high. And then we come back up, we retrace. We retrace to discount, we respect it. Additionally, we create an SMT. So this is a great model to then take out this SMT TP. I do expect this SMT TP to get taken. That gets taken. We're in these few P to re-raise. Let's see if we respect them. We do. So all of these stacked PD raise right here, especially this 15-minute, does get respected. We come up, take this protected high, and we'll probably come up and take this protected high as well. So there we go. Just generating some more structure here. We have an uptrend going into this macro. Okay, so 8:30, or this is 9:30, this is market open. You have a massive displacement down. So market open can either do two things here. It can either have a strong candle in a certain direction, and we're going to continue that direction after tapping into the 1 minute, which happens here. Or this is manipulation, taking out these lows, and we're just going to keep heading higher. So right here, I have first entry labeled, but I would not take this at all. But we do have a 1 minute, so we'll see. Do we respect it? Yes, we do. So that shows us we may want to head lower at the moment. We don't have to keep heading lower though, but we could do possibly is retrace into discount of this move. So right here, from this respect to this 1 minute, we come down and retrace discount. Now we could possibly see heading higher. Okay, so right here, this is an SMT. This is probably because ES was creating lower highs while while NQ was creating higher highs. So here's an SMT. We may see lower. We're also at an uptrend going into this macro. So we could see a reverse here. Yeah, right here we're just consolidating a lot. We actually come back up. So this SMT, since it wasn't directly on any candles, there's really no low that we're looking for, but you could see that at the end of this SMT, around the end, we did sell off and we did take out these lows. So now we have an uptrend right here. We form an SMT, and this is what's really nice to see. We have this uptrend going into a macro. We have an SMT formed right here. I can't expect this to get taken, so that gets taken. We don't have any market structure shift to the downside yet because this candle is not closed below this low. So this ends up getting taken. We keep going up. We form another SMT here. Right here. This is the SMT TP. This is protected high. This gets taken. We may see this get taken next or head lower. So this protected high gets taken. Form another SMT here. Right. This is just an example of a very small little model. SMT, SMT TP. This gets taken. So now in this macro, we're in an uptrend. So I could possibly see us reverse to the downside. We did also respect this for value gap twice. We still have this protected high that might once get taken out. But this is really nice to see. In addition to this, we have... This actually would probably be a very nice entry. So right here is market structure shift. The reason why is because we have an uptrend going into this macro. We end up selling off, closing below this recent low, and we come back up, retrace to this 1 minute. So we did retrace to it once, but we were not ready yet. So we came back again. And so right here would be a great first entry, especially because we have already tapped into this fair value gap and respected it. So this right here, aligned with this SMT, this protected high getting taken, this market structure shift, this macro, this is a beautiful entry. I would definitely take this. And I would probably target this low first and maybe target this low. So this low gets hit. We build a little bit more structure. We do form an SMT though, right here. We also have, not yet, there we go. We have displacement up, creating a fair value gap. So I do not expect this low to get taken at all, but this would be a great trade right here. We have an SMT. SMT TP gets taken out. We form another SMT TP, or we form another SMT right here. Here would be protected high after displacement down. We have an SMT TP that gets taken out. Then we come back up to take out this protected high. So this model, you know, same repetitive thing over and over and over and over and over. So now we're just waiting for some more structure. Okay, so right here we create another SMT. Waiting for displacement down. Here's the displacement down. Here is the SMT TP that gets taken. So right here, massive displacement down. This is also a macro. So we have an uptrend going into this macro. SMT formed at the top here. This is beautiful to see. I love this. And then we just sell off, right? It happens over and over. We come up, take this protected high. For some reason, it says SMT TP down there. I don't know why. This right here must be an SMT. I could be wrong, but this right here might be an SMT. Let's see how this plays out real quick. Did we take this low? No, we don't. I don't really know what this is. I'm just going to take this off for now. Okay, so we made our way back up. Now, yes, this did reverse the move, but we still came up here. It doesn't matter that we came up here. It's the fact that we did still reverse the previous trend with this macro. We came down and reversed it. This can be the move on its own. Okay, so now it's 2 p.m. Usually at 2 p.m., I could expect to see some sort of trend to a certain side. So I guess we'll see if that happens. Right here, we create an SMT. SMT TP gets taken. Another SMT right here. SMT TP gets taken. We do also create this fair value gap. Now we have this fair value gap, and we also have this protected high. So this fair value gap right here could be a good entry to take out this previously protected high. So that's what happens here. So this 2 p.m. does not look like we're really making much of a continuation. Actually, we might be right here. This might be it. Yeah, so form another SMT right here. We come dip down, tap, take out this SMT TP, tapping into this 1 minute right here that was previously respected. We have this protected high. That probably wants to get taken. So that gets taken right here. Now, with the knowledge of 2 p.m. giving us a specific trend in a certain direction for a while, I probably would honestly take this right here, because look at this. We have an SMT. This dips down, taps this 1 minute. That's already respected. This could be a possible entry for me. Even this right here, both of these entries, this one right here, because if we're to continue in a certain direction for a while, this fair value gap should get respected, right? We also do have an order block right here. that we do tap into. When we come down and dip down, taking out this SMTTP, this 1 minute could also get respected. We come up to take this protected high. And now that we have this macro, which usually this 2 p.m. move runs until we hit this macro, I could see us reverse or just stop the trend. So we tap into this 1 minute again, respecting it. Then we form an SMT up here, displacement down. We have an order block right here created. But we do tap into this 1 minute. So now that the trend's possibly over, with this SMT created, displacement down, fair value gap created, I would take an entry right here to target this SMT TP. That gets hit. Right after that gets hit, we're probably going to come up to take this protected high. So we just took out the protected high. And now it's probably just about the end of the day. See, end of the day, we're not really doing anything here, and that's kind of the end of that. So here's 2 days worth of action, annotated. Again, if you guys are confused, just keep watching the previous episodes. Also, again, feel free to check out my course. I do have, or check out my Discord. I do have a course that's completely free that you can have access to, and it will explain sort of each and every one of these models. The course starts out with like very simple stuff, and then slowly gets more complicated and more into things that I teach here. The only thing with these chart annotation videos, this is like the first 20 episodes, it's real simple stuff. It's just basically SMT, TPs, and protected highs and lows with some PD arrays and draws of liquidity. But once I get caught up, which I'm almost caught up here, it's going to get a lot more complicated, a lot more precise, and I will be adding higher time frame biases mixed in, because I'll actually be making charting sessions right after I'm done trading for a specific day. This is kind of just all in the past. So, hope you guys learned something, and I'll see you all in the next episodes.